Hi, Larry Gaines, PowerCycleTrading.com. I had a couple members today in our trading room ask about the kind of the macro trend. How can you spot, the change with the market going down or going up on a macro basis? And there were a lot of questions about, putting your money into cash, like if you had an IRA or something like that. So this is our trading model at PowerCycle Trade, and it's based on momentum and cycles. So this is a monthly time frame. So I wanted to go through and show you the big macro downtrend back in 2000. Okay, so here's what we call volatility squeeze. This is a monthly time frame, and you see momentum shifting down here. Cycle 1 right here where my pointer is, and 2. These are two momentum-based indicators. So this is going to give us potential direction based on momentum. So you can see momentum shifting down. So then look what happens. This is back, obviously you probably know. So the market, and these are moving average crosses here. So key moving averages. And so then the market got hit real hard to the downside. And look how momentum accelerated and got more sustained, deeper, more momentum coming in. Again, this is a monthly macro. So, when that happened, you could go to cash, and you don't come out of cash if you're looking long-term macro until the reverse of the indicator. So right here, then you can see where cycle 2 in the red starts to come back up and then crosses back into the zero line, and that would be where you could get back in from a macro standpoint back into equities. Okay, so that's 2000. All right, so that took from the end of 2000 all the way basically 2.5 years. Okay, so the next one then is, let's take a look at 2008. All right, so here we are with the S&P 500. Now this is December of 2000, January 2007. All right, so you can see how it's pushing up here. Now we're starting to get reversal indicators, reversal signals that the market cycle might be changing to the downside. But look at momentum. Cycle 1, cycle 2 are still positive, and then look what starts to happen. They start to roll over. We start getting negative momentum, or momentum indicators reverse, and we start getting a sell-off. Comes in here, moving average reversals right here where those arrows are, and then the market really gets pushed hard to the downside. So then that's when you get out right there, go to cash, and then where you go get back in is when the momentum shifts back to zero right here. So there's where you could get back in on the macro time frame. Here's where you could have gotten back in a little bit sooner based on a weekly or long-term time frame. Now let's go take a look at the current market where we are right now. So here we are coming into the end of 2019. All right, so momentum still solid to the upside. See it solid to the upside. Now we get a reversal indicator here, so that an alert to potential change in cycle. And then we get the moving average cross, momentum shifting down to cycle 1 and 2 shifting down, and then the market cratered. Now, the thing is, we want to see now the reversal of this. So if you're looking at, longer term, what to do with your cash, like you do have an IRA or something, this can be a great indication or signal to use using a power cycle trading model. So as long as cycle 1 and 2 stayed negative, you would just stay in cash. That doesn't mean you can't trade shorter term. That means longer term. Hope this helps. And if you'd like to learn more about some other types of trading strategies to go along with our trading model, I'm going to be doing a free option trading workshop this Saturday. And so if you'd like to join us at 11 a.m. Eastern, make sure to sign up on the registration link and come on in and learn a lot about option selling strategies and hedging. Hope this helps, and I'll talk to you on my next video update.